In today's show, I want to tell you an experience I had with a question a gentleman was asking me, and something I just read in the Wall Street Journal just came together as like a warning bell to me that I want to talk with you about. So a gentleman comes up to me later in the conversation. I asked him his age. He was 33. And he said, my buddies say that I'm really doing the wrong thing. I'm doing this Roth thing you talk about, and I'm in that target fund, and my friends say that's for losers. They're all talking about all the trading they're doing on Robinhood. This isn't a bash on Robinhood, by the way. But they're all talking about, they're buying this, they're doing options, they're doing all these different things. And they're making this money on that trade and blah, 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 blah. And that they're on the shortcut is what I call it, when people think they're on the shortcut to wealth. Well, it's so weird that I have this conversation with this 33-year-old guy, and then the next morning I read a story in the Wall Street Journal about how Gamblers Anonymous is having a big uptick in membership from people who are doing gambling-type stock trades and option trades. Yep. You know what else? They're almost 100% guys, young guys. And as I shared once before, I've been having this conversation with my son, who's 19, and took money he got for his birthday and is doing trading in an account. And I've talked to, my son's name is Grant, I've talked to Grant about the whole idea of buying and holding. And at 19, truthfully, he thinks buying and holding is buying something and having it for a month. And he's not alone. That there's this gambling kind of culture particularly with guys. And the problem is that it becomes addictive like any other kind of gambling. And I'm not even going to get into the tax problems of rapid buying and selling. That's only part of the picture. Because beyond that, people who trade frequently tend to not make money, they tend to lose money. The data on that is clear as could be. So the thing I've talked with my son about, and you may have heard me say before, is that if it's really important to scratch that itch, to do rapid fire trading, anything like that, have some money you devote to that. But the money that's really going to matter needs to be Dullsville. And I know I'm the dullest man alive. I promise. I've known a lot of people over my life. I'm as dull as they come. I invest in a dull way. I do widely diversified investing in funds, index funds that are very low cost, and I own little pieces of many different companies around the world, different types of investing. And so my strategy is so plain Jane, but I've been able to develop meaningful wealth over time. And so what is it about? If it's about the sport, then it's not about creating financial security. They are mutually exclusive, in my opinion. So what I like is Chuck Schwab's phrasing from forever ago, core and explore. That you put most of your money in Clark Dullsville. We can just call it Clarkville, Dull Land. And then the rest, which should be no more than 20% of your money, you want to play the market with that. You want to play options. You want to do all kinds of crazy stuff. You want to buy the hottest new whisper stock with AI or whatever. Fine. But at least most of the money you're putting aside, put it where you're going to have, over time, a meaningful, safe return. Again, Dullsville, Clarkville.
I worry about the taxes that some of these people are going to deal with too. Isn't that like a huge problem?
So I've been having that conversation with Grant.
Yeah.
About the rapid fire trading. And I've explained to him the difference between ordinary income tax and capital gains tax. So the tax code is designed specifically to discourage rapid fire trading. Because when you do a buy and sell in less than a year, you're punished by the tax code with punitive tax rates. And or you can look at it in the reverse. When you hold something more than a year, you get preferential, much lower capital gains tax. So there's a lot here about what's going on, and there may occasionally be a woman who's doing it, but there's something about us as guys that it just is almost like macho. Imagine hanging out with the buds, and somebody's talking about, yeah, I bought this blah, blah, blah AI company, and I've gone up 3,400% in 90 days. I wonder if I should buy more of it. And say, so what are you buying? Oh, well, I buy Target Retirement Fund with my money. They're done with you.
You get kicked out.
Yeah, you're kicked out of the cool guys club.